Hey, what's up guys, John here. 430,000 companies have filed bankruptcy so far in 2023.
For one, a number of other businesses have recently filed for bankruptcy.
According to S&P Global, more than 230 companies have filed for bankruptcy so far this year.
This is the highest rate since the great financial crisis in 2008. Now, you may hear that we're going to have a soft landing, everything is going to be okay, and I would love to personally believe that. But the more you look in to what's happening and you look behind the curtain, you will see something different. You will see, most likely, this everything bubble that's on the verge of popping. And I believe it's going to pop very, very soon. Here's why I believe this. So, U.S. households have a perceived net worth of $18 trillion. Did you know that $5 trillion of the $18 trillion was acquired in one single year, inside of 2020? Now, during this period, there was a lot of stimulus, unemployment benefits, PPP loans, eviction moratoriums. People were able to pull money in because they weren't paying rent. A lot of them were not paying rent, and they were able to pull money in, save it, invest it in their business, buy cars. There was so much money out there. And so when you look at this massive bubble that's being formed, then you look at what millions of companies are going through right now, what you're going to likely see is this number go from 430,000 to over 1 million bankruptcies sometime next year. And so the big question is, if you have all of these bankruptcies continuing to skyrocket, how can people pay on their second homes, on their cars, on their primary residences? They're not. They're not going to be able to. We're going to begin to see a fire sale of assets, the likes in which we've never seen before since this country's existence in 1776. It's a big claim, 250 years. I believe it's going to be worse than 1929 and 2008 for many, and I believe you're going to see so many people go out there and create massive fortunes. If they're positioned, if they're prepared, if they understand what's coming, they're going to be able to go out there and do some very, very, very big things. Take a look at what's actually happening versus what they're telling you is happening, and then you'll be able to make smart, well-informed decisions for yourself and your family. Please hit the like button. Hit the like button. YouTube will share this content to educate more people about what's going on in America. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Take a look at this. So, U.S. bankruptcies surge as economic strains mount, corporate failures echo 2008 crisis. Now, according to the latest data, bankruptcy filings have seen a significant increase of 13% over the past year, culminating to 430,000 cases. Corporate bankruptcies have experienced an even steeper ascent, soaring 30% on the year to 17,000. This brings the count of major bankruptcies to the highest level since 2008 financial crisis, a troubling echo of tumultuous period of economic history. Now, when you look at these numbers, it's a 30% jump between September 2022 and September of this year. 30%. That is significant. And look at this. Corporate bankruptcies have experienced an even steeper ascent, soaring by 30% on the year, 17,000. Now look, I saw this lady on Twitter. She runs or TikTok. She runs a VC firm, right? And look at what she's saying that she's going through with her company and what a lot of other VC firms are going through. Because this isn't just, small businesses, not just large businesses, it's all businesses.
PitchBook released data. 38% of all of the VC firms have completely disappeared off the map. So they pulled data here, basically in the last 3 quarters of 2023. These firms, 38% of all VC firms, have invested in less than 2 companies. So they're basically off the grid. Some people just call these like zombie funds. Like it's really hard to kill a VC firm because like fees and deals just sort of keep going.
Now, notice she says zombie firms. Now look at what Reuters is saying. Look at what some of the biggest banks in the world are saying. They're all saying the same exact term because all of these companies are going to soon be zombie companies that are going to disappear. Look at this. So this is Charles Schwab, Schwab.com. According to Standard & Poor's, the trailing 12-month speculative grade corporate default rate rose 4.1% in September 2023 after hitting a low of just 1.3% in April 2022. That default rate is expected to rise 5% by the end of the third quarter of 2024 as corporations struggle with the rising borrowing cost. In line with rising defaults, there have been significantly more downgrades than upgrades in the high yield market this year. Investment grade corporate bonds have seen more upgrades than downgrades, but only on a slim margin. This trend may continue as rising borrowing costs tend to impact the lower rated, highly leveraged companies more than those with investment grade. Now, you have corporations have to refi $2 trillion in debt, refinance $2 trillion in debt. Now look at this. As some 770 billion investment grade rated bonds mature in 2024 and over 900 billion in 2025, 2026, if spread continues to compress, we will see additional supply enter the market, but we expect much of the new supply to be focused on refinancing activity. So, what are they saying here? Companies waited for rate cuts in 2024. They're trying to hold on to wait to refinance, but they're not going to be able to. They're going to make these companies, they're going to be forced to refi because they're not going to be able to risk it. If they don't pivot, it's going to be a disaster for a lot of these companies. They're looking out at what's happening now with inflation, looking at the world and saying, you know what, it might be harder to refinance in 2025. If we see a wave of defaults occur in 2024, banks might not refi me. So it makes more sense to refi sooner. And so you're starting to see all these different changes, these fall of zombies, why corporate failures could surge in 2024. Debt-laden companies across Europe, Middle East, and Africa face a $500 billion refinancing scramble in the first half of 2024. So you look at this $2 trillion in corporate debt is only America. Then you start to look at this, you're like, okay, well, all these other countries are all facing the same situation in the first half of 2024. What are we going to see here? What are we going to see? We're going to see a situation where it's going to become very, very, very difficult for companies to stay in business. And so the big question is, a recession is when your neighbor loses their job. A depression is when you lose yours. We're going to be walking into a situation where many people are going to be losing their jobs. Many people. But during this period, I believe what a lot of companies are going to be doing is they're going to be looking to drive down costs. They're going to be reducing office square footage, putting more pressure on banks because they are one of the biggest lenders. A lot of regional banks, they own 70% of those loans. They're going to see even more haircuts on these valuations. So what are you going to start to see? Banks are going to continue to lose money, not just from the corporations, but from the shrinking portfolio in the valuations of their commercial properties. You're going to start seeing a lot of very, very interesting dominoes start to connect in 2024, and a lot of layoffs continue to ensue. So businesses, small business owners are already seeing these sacrifices. What they're doing right now is they are merging into trying to get, they're trying to crowdsource instead of lenders, trying to borrow from friends and family. We're simply foregoing expansion plans that could have been funded by more capital because big banks and small have tightened lending standards as the Federal Reserve hiked up interest rates the past 2 years. The collapse of 3 regional banks this spring and the possibility of stricter regulations have likely made some banks more cautious as well. Now, when you look at what people are actually searching for online, you can get a clear idea as to what's happening. When you look at, need job, for example, dating all the way back to 2004, you can see the trend is starting to really pick up. And I think after the holiday season, we're going to start to see this really pick up as people, accumulate more debt. They're putting student loans, all these different obligations they're putting on credit cards. What's going to happen? Because even if they have to make the direct payment to student loans, the other money that they would otherwise wouldn't spend to student loans, they would pay off on their credit card bills. So the credit card bills are going to continue to pick up. Now, HELOC, home equity line of credit, the same exact thing. People are looking to get loans on their properties. Why? Because insurance and taxes, everything's continuing to rise, the economy's starting to change, people are desperate for credit, right? So when you see food bank lines, why Americans are going hungry despite a strong economy, you can't make this up. What strong economy has Americans going hungry, right? It doesn't make any sense. What they're saying is happening is very different than what millions and millions and millions of American households are going through. Food banks demand high, but donations fall. Food insecurity increasing in Northwest Ohio. This church saved me, struggling to fill the pantry. Organizations bridging the gap. This is all 2 weeks ago, 19 hours ago, 2 weeks ago, 2 days ago, 2 weeks ago. This is what's happening now. This is what's going on. So when you see these layoffs where, Nike is looking to cut $2 billion and cost savings over 3 years, and then you look at what these banks are going through. Citigroup laying off 24,000, TD Bank laying off 3,000, Bank of America just laid off 7,500, and then you had other banks quietly lay off 20,000 employees. You have to ask yourself, are we walking into a very, very, very big investing opportunity? I think without doubt it's going to be far greater than 2008 and 2009 when everything hit the fan and those big companies got way bigger. Blackstone formed Invitation Homes, went out there, purchased 80,000 homes. Now, what did they do? They had this one concept, this one theory, and this theory was they're going to be called the dollar more guys. And the dollar more, guys, is where they would go to auctions. They would look at what the land is worth. They would ask themselves how much it would cost to actually build that structure new. They'd add up the two numbers, and they'd offer $1 more than the replacement value. So let me give you an example. If the land's worth $100,000, and let's say it's a 2,000 square foot house, and it costs $200 a foot to build, so it'd be $400,000 to build the property. The land's worth $100. They would say, okay, this property's worth $500,000, but that's a brand new home. So I want a 50% discount to replacement. I'll give $250,000, and I'll pay up to $1 more than that number. And they would go out there to auctions all over the nation. And they would send their guys out there striking checks, and they would buy out one house after one portfolio after the next. They would just go buy. That's exactly what's going to happen, I believe, going forward. Banks are going to look to get rid of a lot of these bad loans. We're going to see so many different companies flourish, and so many just get absolutely destroyed. So the next year is going to be the great wealth transfer. It's going to be the greatest opportunity. You have to position yourself. If you're in high interest rate consumer credit card debt, do everything you can possibly do to get out of it. Everything you have to do to get out of it. Put yourself in a position where you have access to money. Because when everybody else doesn't have access to money, but you do, you have a significant competitive advantage. Look at a lot of industries. A lot of industries are going to do extremely well in the next couple of years, and a lot of industries are going to go from doing well to just going out of business. What do you think about this entire situation? Drop below. And if you want to fix your credit to position yourself, maybe to get bank funding or bank financing, we'd love to help fix your credit at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com, click the link in the description just below this video, schedule a free strategy session. Catch you in the next one.